Asian markets mostly declined despite overnight gains on Wall Street. This as a result of the caution about the regulatory outlook in China. European shares pulled back following the global market mood as the U.S. Federal Reserve policymakers gather for a closely watched monetary policy summit. And over in Europe, the European Central Bank chief economist Philip Lane said that the economic impact from the spread of the Delta COVID-19 variant is likely to be limited across the Eurozone, which remains on course for a robust recovery through 2022. And stateside U.S. stock futures a little lower in overnight trading. To talk to us about a lot of the stuff playing out this week, and especially that key Jackson Hole event, we are joined on the line by Nesson Naya, who is from SASFin. Nesson, thank you so much for your time. Looking at the JSE, we started the day off weaker. It's around 130 right now. How's the market faring?
Yeah, good afternoon, Nastasha. Listen, we obviously came into this week very strong. We had a very strong last week on the back of a very weak last week, and it seems like things are improving slightly. Although today's market action would, give one, I think, a little bit of pause. We've pulled back slightly on the main sort of rand-based, rand hedge-based industrials, the likes of, Naspers, obviously you mentioned, British American Tobacco, Richmond, all the big sort of heavy rand-based rand hedge shares pulling back on the stronger rand. And of course, we've seen a slight pullback on resources as well. It's been quite strong during the course of this week. Oil price as well, below 70 right now. So it may be that we're setting ourselves up for a little bit of risk off. That big Jackson Hole announcement coming tomorrow, maybe the market participants believing that it might be just prudent just to take some cash off the table now.
Right, so we had Woolworths publish their numbers. They've reinstated their final dividend. What were some of the highlights for you when you looked through those figures?
Yeah, very good set of numbers, I thought. Obviously, we must be aware that this is compared against last year, which was, or the previous year rather, which, included the last 3 months of lockdown, from March, April, May. So to me, I think a reasonable set of numbers in that context. 10% turnover growth. But if you drill through the actual divisions, obviously food continues to lead the way, both in terms of price increases as well as in terms of volumes. It was also very encouraging to see the fashion beauty segment seems to be recovering. That segment's been in a decline now for many, many years, but it seems like they've managed, to arrest that decline. Positive flows coming out of there, positive sales flows coming out of there. And of course, the David Jones Australian business, they've sold a few properties there. They've managed to right-size some of the leases that they have there. That business also looks like it's coming right for Woolworths. So I think Woolworths shareholders that have had a tough time in the last 4 or 5 years, nothing to complain about in this set of results.
Right. So yesterday I asked my market watcher what I call an interesting question. It's just basically for me to get a sense as to where my market experts are. If I gave you monopoly money and you were flushed, as the key word would be, which asset class or stock would you buy if you wanted to entertain the speculator in you?
If I wanted to entertain the speculator, okay, I would buy into either a commodity company, maybe even a gold company, which I think, might be the right place to position oneself in now. We'll have to see what happens in Jackson Hole and the outlook on inflation. Or I'd buy, one of the tech startups. There's a whole host of tech startups that you could choose from, from companies selling online content in the form of digital streaming of video or music or, even online services. So I think those would be the two sort of areas I'd focus on, but only with monopoly money, though, not with my own.
So I'll share mine. If I had monopoly money and I wanted to entertain the speculator in me, I would buy EOH and I will explain the next time you and I get to do our interview why I would be speculating my money on EOH. But Nesson, thank you so much for your time. That is Nesson Naya from SASFin, and as he did mention, the key event is that Jackson Hole meeting, and some analysts, particularly in the US, trying to figure out which is scarier. Is it the prospect of Fed tapering beginning, or is it at the end when Fed taper begins to end? Because that at least would give us some kind of indication as to when interest rates will begin to rise. However, we're going to take a quick break, and when we come back, we'll have the labor force with Mbongeni Mutsu.